Hey, what's up, everybody? Josh with Forex Cheat Codes. Just want to offer some insight here on a powerful indicator that a lot of traders use on a regular basis for momentum to enter trades, to get out of trades, and that is moving averages. So I'm going to share today what the most powerful moving averages are, what types you should use, and probably what time frame you should use. We're on GJ right now, so I want to go over the four main types. So, in general, there's a lot of different types of moving averages. You've got linear weighted, you've got exponential, you have smooth, you have simple. Um, these are all different calculations of how to um, basically just define how many candles should be counted in a sequence and how to actually use those. So if we take just a single moving average on a normal value, let's say number 10, it will look so much different from a simple moving average to an exponential to a smooth. We just look at a simple moving average, basic, right? So we take a 10-minute moving average here. It's going to look something like this, right? Pretty closely follows price. Pretty good at calculating turns. When price closes under it, it works all right. Now let's take a look at smooth. Smooth is obviously a little bit smoother, doesn't hug price quite as much. When that same time period allows for a little bit of variation and movements within price. You can see here in purple, it's actually simple, actually calculate price a little bit better. Smooth, a little bit smoother, but basically if you're looking for an exit, doesn't quite work as well. Um, there's a lot of different types, and the main three types that people use probably the most are simple, smooth, and exponential. Exponential, out of these three main types, is what people use the most of. It calculates the distance between price probably the best. You can see that between these three, simple and exponential moving averages actually calculate about the same, very close overall. But exponential in general is probably the best for um, following price movements the closest. We take a look here, we can see that exponential hugs price pretty closely, but if you're looking for, let's say, an uptrend right here in scalping, hugs price closely, and actually as soon as price basically closed under here, it attracted, attracted a lot of selling attention, was right on top of that, and then price fell shortly thereafter. Price closed over here, retested it, and then fell down. And once it closed above here, it went on an uptrend. So out of these three, from what I've seen throughout a lot of different pairs and through many traders in my own experience to date, exponential is going to be the way to go. So we're going to be looking at moving averages and particularly exponential moving averages the most. So if you're looking for key um, types of moving averages to use, exponential moving averages are probably the way to go. Expo, exponential. I didn't spell it correctly. Exponential, expo, exponential. Sure, we'll run with that. Exponential. EMAs are the way to go. So, so now that we know EMAs are the way to go, hug close to the price. Um, really, we want to answer which one should we use? Since we know now EMAs attract and hug price probably the closest, which one should we use to be the most effective across um, scalping time frames and really all time frames? What is the most used time frames by traders overall? What is the most used time frames for EMAs? right? So let's go and answer that question. What should I be setting my EMA calculations to calculate price the best, right? So usually based on my experience, a lot of courses I've taken, these are the four types you really want to be using the most, right? So EMA, exponential moving average, we want to use EMA 9. So 9 is one of the most powerful ones to use, in my opinion. This is the one that is the best for calculating turns the most, does the best calculations across the board, and one that if you're looking to build into systems, this is probably the one to use more than any other one. EMA 9, once price trends, um, we'll calculate price movements the best. Sometimes it stops you out a little bit early if you're trying to build a system where you're trying to um, catch turns and closes, but recontinuations it catches it the best, and then when it returns again, these closes do catch the movements as you're trying to get it. This is pretty applicable across all time frames. Switch into EMA 9 on the 5 minute. You can see that it does a pretty good job calculating hugging price overall, catching these movements. We just walk through the additional time frames, a little bit flat here across the board, but then when it does start to run, you can see that it does a pretty good job of catching those, and when it closes under, it does catch those movements as well. So 9 is pretty good across the board, moving up to 1 hour. You can see this works pretty well and on GJ, switching to your USD. So this is applicable for not just Forex pairs. It is pretty applicable for indexes too. Your USD did a pretty good job here on the 1 hour. On the daily, you can use that as well. So you can use a combination of multiple time frames of using the 9 EMA, but that is the fastest one overall. There are shorter time frames if you need something a little bit faster, but in general, this does a really good job of keeping you into moves and staying on top of turns the best. So the 1 minute time frame is definitely the one to go, in my opinion, if you're looking for the best time frame to use. So definitely want to use EMA 9. Next best moving average you want to try and use across the board that is basically a medium grade is 20. EMA 20 is an amazing job of calculating EMA's, or excuse me, medium grade turns in price. Um, these moving averages do apply pretty well to other pairs as well. Sometimes you can use these crossovers of the 9 and 20 to catch certain moves, and certainly that does a good job there at certain times. It's a little bit late here, but in general, you can see it's essentially calculated this price run from here to actually this holds price all the way to here. So you can actually use these as an indicator system by themselves. The 920 crossover. Here you can see there's a cross here, caught it here, so a little bit of pips, and then you catch the buy. But if you're looking to have a entry signal that's going to hug price to a certain degree, but maybe the 9 is a little bit too fast, the 20 is the way to go. I will like the 20 just when I'm looking at moves, I'm trying to stay within moves, let price run. I don't really use a lot of moving averages in general at the moment in my own system, but I really like EMA 20 because it does calculate price the fastest, but it also gives me breathing room to stay in these moves where you'll see like the 9 might stop you out. A situation here where you're buying, trying to stay into a move. Maybe you exit here when really, if you just use an EMA 20, you could have stayed in. So this is pretty applicable across all time frames. GJ, you can see, does a pretty good job here to actually start bouncing off some of these. Does a really good job keeping you in this move without stopping you out with that close. Here, basically, it started the move here if you're just using just an EMA-based system. Buying, 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 and you're still buying this entire move here. So you would have got in approximately Thursday about 2:30 on a 30-minute, and you'd still be in this trade overall if you're using that medium grade moving average. The 9 It does hug it as well, but you've been stopped out here if you're looking for a close and would have missed this rerun up here, and then this consolidation here. So definitely consider using the 20 moving average in general. So excellent medium term moving average across the board. Um, so that is a good one. I highly recommend using in general across all pairs. So the next best moving average to use, I would highly recommend using the 50. So the 50 does a really good job in general calculating turns. A lot of moves are calculated with EMA 50 across the board from what I've seen in my own personal experience in terms of catching major kind of moves and trends overall. So sometimes you don't want to catch price when it's trying to make small and medium turns overall, but you want to catch it when it's starting to make relatively big gaps and changes in the market. So here you can see where it started to kind of turn up a little bit. Caught a big move here, a 9 or 20 would have kind of got you chopped up a little bit here, just kind of inconsistent moves across the board. Um, but using this would have basically saw that, hey, this is a move here. If I was looking for buys in this situation, could have stayed in this move up to this area if that's what you're looking at, and then re-got in here using the closes. Here you would have got stopped out, but would have been able to easily got back in here. Um, Something to really consider. This is a 1 minute time frame, so this is moving pretty quick across the board. But just cycling through various time frames here does an amazing job, similar to the 20, and staying in this move across the board. Um, but a really good EMA as well. And the interesting thing about these time frames too is they are applicable, or excuse me, the moving averages, they are applicable across all time frames. So you can use these in a multi-time frame strategy where, hey, I'm looking for the 50 cross on the 5 and 15, or you can easily, on this chart, on whatever chart you're on, multiply the amount um, of the time frame to get these um, amounts as well in various time frames. So let's say um, the EMA, although you can include these on the on time frame chart, you can calculate these on higher time frames, on lower time frames as well. So let's say I like how the 50 moved on, let's say, the 1 minute, but I wanted to see what the 5 minute EMA 50 looks like. There's two ways you can do that. You can say, hey, I want the EMA 50 on the 1 minute and change it to the 5 minute, and so that will give you a good calculation. You can turn off wait till time frame closes, so you'll get a more of this um, stair step type indicator. You'll see it's not as smooth. But another way, in my personal opinion, so you still get that 1 minute close, not on the 5 minute, and still get that calculation, is multiplying 50 or whatever the EMA is, or any moving average, times the amount. So 5 times 50 is 250, and then put down the 1 minute chart, and you should get the same moving average, only it's a lot smoother across the board, and you'll use the 1 minute closes rather than having that slight calculation. Those little small details would definitely matter um, when you're using higher time frames on higher time for moving averages on lower time frames. So let's see if we just compare the 5 minute 50. You'll see there's a slight variation here. Now, let's see the 50 here. It's very close, but these little details, when you're talking about staying in and out of moves, is pretty important. So basically, you just want to use the smoothest time frame that is the most accurate as well, representing that data. So I will typically just multiply it in these situations and use this variation. So that's a really good trick to use, and just multiply that out. And that applies for these others as well. So if you want to use the 9 minute on the the 5 minute, you would use multiply 9 times 5, ultimately use 45, and that will give you the same calculation of that 9 minute on the 1 minute chart, but still have that tight hugging moving average. And the same for all of these. Just multiply up. So basically, you just take the minute value and multiply it times that lower time frame. So an hour, you would multiply times 60 times 5 minute. They have a 300 moving average, et cetera, et cetera. So just a really good trick there. The higher the time frame, the better that is, especially if you're using the 1 hour, the 4 hour, or what have you. So just a good trick there. So and the last most popular moving average, and it's probably the most used based on calculating price. This is one of my personal favorites. I've used this quite a bit in previous systems. I don't use a lot of moving averages now, but if you're using that in general, I really like the 200 moving average for getting in and staying moves probably the most. This thing really is an excellent way to get in moves and stay in moves across the board. I really, really enjoy using this, as it really does give excellent feedback in terms of higher time frame moves and let you stay in moves longer. Let's say if I'm looking for a sell here, we can see that we got kind of a price retest here on the GJ 1 minute. Price came back, bounced off of here, and just immediately collapsed down. So if maybe you're looking for that move to get in here, is a sell. Once it actually falls a couple times, a retest here, maybe you drop down, and then when it closes above, you stay in that move. So that's obviously an 80-point move. Excuse me, 80 pip move there. Same thing, kind of going the other way. Break above, retest. You're staying in this buy. Maybe you get out here. There's probably some news here. Another 57 pips there. Get back in when it closes above. You're right on top of that move. Another 68 pips. But in general, you can see how this thing really hugs price really nicely. And this one is a really, really great indicator to use. If you can use a slope change as well, as this thing changes slope as well, along with this move, works pretty nicely as well. Like just general those combinations, the 200 plus changes in slope. There are some good slope indicators as well. That's a little bit beyond this video. I really just want to get into the actual numerical indicators, values, and let you kind of play around with those. These are really good cheat codes to use when trying to identify major price movements. A lot of traders will use these, and you'll actually see these used on a lot of higher time frames as well. So if you're looking to get in and stay in those major moves, here's just a pretty good example. I actually haven't even looked at this chart. But if you're looking at these moves, and we looked at these on the 1 minute, right? So if we can look at kind of the break above here and just kind of the slope change here on the 15 minute, obviously we got the close here and that was a little bit late, but look how this move basically just played out the entire time. So let's say if you're calculating a move on the 200 on the 1 minute on the 15, so if you did like a 1 minute, let's see, let's go ahead and delete these off of here. So we'll do 15 times 200, so we have that 50 moving average on the 1 minute. That's just a nice combination here that you can use. It's pretty effective. So 15 times 200, right? So it'd be a 3,000 moving average. You're like, man, that's crazy. Why would I use that? Well, you get the 15-minute 200 moving average on the 1 minute. That's spot on in terms of accuracy. So very simple, just a two moving average system here. Again, we're using the EMA very specifically. That works really, really well. So obviously we're using a 3,000 EMA, which is a 50-minute 200 EMA on the local chart, which is the 1 minute. You can see how nice this move is overall, right? So essentially you got the crossover moving above these. Maybe you can use some tools here for the, uh, as we get a triangle kind of formed here, maybe some news, break above, and then you catch either a part of or all of this move here. But this is a running move if you're just staying above price and looking for those crossovers. Really, really nice. So that's 168 pips and running, quite a bit on Forex pairs. Um, so obviously some sideways movement here, but another really nice move here. Um, Basically just staying above both of these, just looking for crossovers. This is, using these crossovers is keeping you in these moves. Obviously a little bit of back and forth here, getting whipsawed and chopped up. But if you knew you were going to get the overall price movement, looking for these buys and looking to stay in, um, just using multiple time frames in these moving averages are really keeping you in these moves. So you wouldn't get the crossover of these moving averages really until right in this area here. So even though we are dropping below, so this is a move here, quite a bit of pips. So this on the 1 minute, you're looking at about 285 pips on the 1 minute. Really, really nice move in general. So hopefully this is helpful. There's a lot of tactics and tricks you can use overall. To use moving averages and build these into systems. But if you're looking for reasons to stay in price, moving average crossovers are helpful. Closes above these moving averages are key. And then certainly if you're looking at building a system, I definitely would look at these for time frames, EMAs in general, and build them into whatever time frames you're currently trading or using. And I think you'll find what you're looking for. But use the 9, 20, 50, and 200 EMA in your system. And I think that would be pretty effective in whatever system you're trading. So there are other values that work, but in my opinion and based on my research, these work the best. Obviously, these are much faster on the lower ends. I really like 9 as an entry level because it works fast, especially when you're scalping, getting in and out of moves. These are excellent medium grade time frames and EMAs to use on scalping time frames, especially lower time frames. And 200 is just an excellent entry indicator. It's a little bit longer, but once you're in, you definitely can try and see these bigger moves kind of play out. And really, if you're scalping, you can kind of scalp these bigger moves and catch these bigger movements and stay in trend, even just by staying in one moving average. So ultimately, if I'm having one moving average on my chart, I literally have nothing else to work from, and I'm wondering what the direction of price is for that particular day. I'm really going for, if I have only one to use, and I'm on lower time frames, I'm definitely going for that 200 EMA for sure. So does a really good job on lower time frames here. Downtrend, slopes kind of pointing down here, uptrend, moving upwards, moving sideways, starting to tip down, then back up, down, up. Slopes is down for a little portion, but generally speaking, up, 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 up. So prices above EMAs probably want to be buying, probably starting to slope down and go below, really looking to sell. So hopefully this is a helpful video. It's applicable across pretty much all Forex pairs and indexes. It works well for NAS, works well for US 30. Does a really good job hugging price. But if I'm picking one overall that I really like, I'm going with the 200. So good luck trading. And if you have any questions or other things that are working for you, feel free to comment your thoughts within the comments or hit me up directly. This is Josh from Forex Cheat Codes. Hopefully this video has been helpful for you. So good luck trading, guys.